Hello, everybody. Welcome. Today's Thursday. I'm sitting down with Dennis Prost. Just want everybody who's joined us to let you know that this is being recorded. We will share it on YouTube. Hopefully that's okay. And if it's not, feel free to drop off. But on another note, I just want you to know that the messages in this video are for informational and educational purposes only. They do not constitute investment advice. While we do have a professional CFP and RP, this is not the time for him to provide investment advice. So if you'd like to, feel free to contact him, and I'll share his email and phone number later at PVG Asset Management. While every effort has been made to provide accurate information, we cannot guarantee complete or timeliness of the information contained in the upcoming video. So kind of be aware of that. Like I said, this is just for educational purposes and trade at your own risk. I thought it was an interesting day. This is my SPX chart, and I've mentioned this channel before that we've fallen behind on or fallen below it. If you look at these, this is the 20 SMA and the 10 SMA. We're still headed down, even though we've kind of turned a corner. Today's action, this is what makes me nervous. This basically selling top right here. The bulls, while they did make an effort, they couldn't hold it. And I've seen it in a couple of stocks that I looked at, that all they did was basically come back up to their 20 SMA. Google was another one, I think. I look at Google on a daily, it tagged its 20 SMA, but then retraced a little bit. So interesting times. One other thing I wanted to look at on the daily, and let me maximize this guy. Maximize. And we'll put a feather in Dennis's hat. I have the Dennis Prost indicators. So while we did get a signal here with this cross, and that little dot right down there is the parabolic SAR. So maybe it's a time to aggressively get bullish. If you're a conservative, you want these moving averages up towards this 34 SMA. But like I said, this is an interesting indicator, or an interesting set of indicators to maybe go aggressive. But if it were me, I'd wait till Monday. Fridays, we usually do see some selling. And like I said, this selling candle would give me pause. I know another thing Dennis wants to talk about, or has mentioned in the past, is the Buffett Indicator. The great Warren Buffett uses this indicator, or used this indicator in the past, to kind of determine the overall level of the stock market, if it's overvalued, undervalued. And he does that based on the overall stock market value versus the GDP. So I started reading a little bit about that. Interesting take on it. I know Kathy Wood thinks that the indicator might be a little bit old, in the sense that it doesn't take into account the more technological focus of some of the stocks. So, it's interesting. It's just an indicator. It's just another, as Dennis has said in the past, another sign to kind of be aware of. Another thing to take into account is interest rates. When interest rates are as low as they have been, it allows, or it encourages businesses to borrow. So as the interest rates are lower, this indicator tends to trend higher. And that's where we've been this past, I don't know, 18, 24 months. Interest rates have been quite low. So take that with a grain of salt as well. You know, don't say, oh my God, the Buffett indicator is at the highest it's been. I think it's 88 or 80% above its normal range. Oh my God, I'm going to short everything. And basically the market's going to tank, because even though the indicator's been high, there are still opportunities out there. And you just gotta kind of cherry pick and see which ones will do the best.
Brian, did you happen to look at what the Buffett indicator is today?
I started reading on it a little bit. Basically just an aggregate of the stock market, right?
Right.
Yeah. Kind of goes into the sense of interest rates. Interest rates have been low. The Fed has kept them low because they've needed to. But next year, they've already signaled that they're going to start to look to raise interest rates. So that may be something to take into account as well. So yeah, your thoughts on it, Dennis?
Well, it's almost double normally what it should be. It's about 232%. You know, when stocks are a good value, the Buffett indicator is below 100. So you go back to January 2020, it was at 159. And then it's creeped up. February 2021, we were over 200%.
Yeah.
So it's just unbelievable, but that's not all factor. You know, the market can still go up. You know, it's just, you know, like you said, with interest rates being so low, you know, it's affected, you know, the stock prices.
Right, exactly. Yeah. And that's another reason, you know, why invest in interest rates, or why invest in bonds when, you know, they're as low as they are. So if you got to park your money somewhere, park it in the stock market. And that's what adds to driving up the market.
Yeah. So I can go over some of the stocks if you'd like, unless you have some other steps to say, Brian.
I like I said, I'm a little bit optimistically bullish based on these indicators here on the daily. I'm a little bit pessimistic for tomorrow, only because the bulls cannot hold. And like I said, Fridays are usually, tend to be red days. So if you're going to go long, you may want to pause till Monday. Dennis, do you want to share your screens?
I can do that. Very good. First one I want to talk about is the dollar.
And I think I texted you. I don't have my phone, but because my son took it. But didn't I text you yesterday that the dollar was strengthening?
Yep, but I got out of the dollar today. I actually went short the dollar, believe it or not. I think the dollar is going to go down a little bit and gold is going to go up. If you look at my stuff here, we're at 94.21. So I'm thinking we could pull back on the dollar to 93. And you can look at some of the earlier charts here. You can see we started to correct on the 2-minute, the 4-minute, and the 60-minute chart here. And that's, as you know, maybe it's time to get out of here.
Better to leave early than leave late, huh?
Exactly. So, and I listened to another podcast yesterday, and he was saying we should pull back a little bit and give a chance for gold to go up and bonds to go up. So you can see here, we pulled back on the intraday chart on a 60-minute chart. You see the 34-day moving average in red. And then in blue, you have the 8-day moving average. And white, you have the 4-day moving average. And both of them crossed below the 34-day moving average. And your parabolic SARS was telling me to get out. So I got out of the dollar.
Well, and the 34 sloping downwards too.
Mm-hmm. So that's a good point too.
Yeah.
So I figured it was time to get out of the dollar and loosen it up a little bit. So you can't stay in a trade forever and fall in love with it. I was doing very well with it. So, you know, down the road, this could move up to 95, 96, but not yet. Okay. The next one I want to talk about is gold. It's 1756. Now, so if the dollar goes down, gold should go up for a little bit too. But, you know, I hope you would agree with me. It's just not time to do it. It tried to go today, but you look at it, it's all red. So I just don't see its time quite yet going to gold. We need to have the 8-day, which is the blue line, pop above the 34, which is the red line on a 60-minute chart.
Yeah, and it'll be interesting to see what gold does tomorrow. You know, if we do sell off in the market, maybe gold will
We'll
pop.
be watching to see if this gives you a pop. But you need some type of action, some reason to make it happen, whether it be on a 30-minute chart or a 60-minute chart to see gold go up.
And this
Right
is
now, I'm not seeing it.
and this is a 60-minute.
Yep.
Oh yeah.
So this is your 30-minute chart, and there's no sign right now at this point in time. You got a little bit of bounce earlier in the day, but all day today, there's no sign of it.
Yeah. Well, look at that MACD down below. Sorry, I'm kind
And
of
what's the 30-minute?
the 30. Yeah.
Okay.
I see though. I see that crossing tomorrow.
That could be.
I'll have to make a note of that and watch that.
So the other good thing about this too is you see the Darvis line here, purple line on the bottom.
Yeah.
I mean, you could get a nice pop. It'll move up to the top of the Darvis line, you know, where it had support resistance before. So not a bad time to buy it.
Yeah. If you were
But-
if you're aggressive on that. Yeah.
And I'm kind of thinking the same thing with bonds too. We go under TNX. You know, we had a nice pop on that one. I sold my short on government bonds today too. I says, hey, we made money. It's time to get out. But here is your daily chart. And we reach back up to a resistance point. You get the Darvis line there. A lot of people like to see it drop below. Let's take a look at the 30-minute chart on that. Okay, it's starting to roll over a little bit.
Yeah.
And there's your 30-minute chart. And it's showing a cross up to the top of the last candle there. Time of indecision there.
Yeah.
Yeah. So yeah, I would like to see a correction. I'd like to see bonds go back up for a little bit. I think the trade's exhausted. As you can see on TBT, which is a 2x on shorting government bonds, we had a nice day with that one today. But look at the last 15 minutes or so on the trade, TBT. You can see it was time to get out.
Oh yeah.
Yep, here's your 4-minute chart. Okay. So the next thing I'd like to talk about, I don't know if I can reshare my account. I want to look at options for the indexes here. And I want to start with the SPY, SPY. trade station is kind of nice because they break everything. Here's your put volume for the day. We're back up greater than the call volume at 2.9 million contracts in the puts. And the call volume 2.3. And still on the open interest, your put volume is 2-1, if you can see that, Brian.
Right, yeah, I think, like I said, I think, we opened, gapped up basically, and I think that's where all that call volume came in, because we, in the past, I think last week saw that put volume over call volume be greater than that. Now it's basically split. But yeah, like I said, I bet a lot of that call volume was in the morning.
Yep.
That's why.
And then people started adding puts in the afternoon.
Yeah.
And let's take a look at the Qs.
Like I said, I think people want to be bullish. I just think they're a little bit nervous about it.
And you can look here, we have 880 contracts in the put volume today and 508 in the call. And again, you're 2-1 on the open interest here. People are still hanging on to those puts.
Yeah. When I was looking at the daily charts on these indices, I think the rut was the one that was the strongest of the three. I think
Well, let's look at the Russell here.
I want to say the rut held its 20 SMA where the other ones did not.
Well, yeah, this one is a little bit stronger. Still the puts are greater than the calls here.
Yeah. Again, that 2-1.
And then DIA, the Dow Jones Industrial Average. And you have almost 2-1 here in the volume today, and 2-1 on the open interest.
Yeah.
So interesting, but we can go back and look at daily charts. And Baltic Dry Index. Oh, one of the ones you may want to watch with gold, just because the market you think is going down, gold and Baltic Dry Index tie together. So if you want to look at some of these, like DHT, might just give you a nice pop up tomorrow. Okay. Those usually tie together.
Well, I know the stories going around are the ships that are locked up in port, basically, because nobody's there to unload the goods.
So they're a good commodity. And let's take a look at SPY, SPY. Here we go, 438. It's still red on the daily candle here. The 8 has not crossed the 13. See, I can pretty much tell whether it's time to go in when this turns green up in the upper left-hand corner.
Yeah.
You've got the 8, 13, and 21-day moving average. And the 8-day has not crossed the 13, if you see that. On the daily chart, we use the 13-day moving average. Gives us the quickest thing to get in, as you can see right there. Okay. So I want to see the 8 or the 4-day just pop into it. It hasn't quite done yet. That would be my confirmation. It's time to get in.
Yeah.
So you did have some positive here. The MACD crossed. The pair of box SARS is positive. The 4-day crossed the 8. So I'm kind of with you, Brian. I kind of want to wait a day or two to get back in.
Right. Yeah.
Okay. The Qs, looking at a daily chart here, it's still red too. Your 4 is crossed, not crossed the 8 quite. They call this what, the sundowner candle here when you have big wick on top, or the tombstone. So we'll see what happens with that. Again, your 8-day, as you see, is not crossed above the 13 on a daily chart. Okay.
So is that candle, that daily's red,
Yes, the daily one is red.
meaning we sold more than, or closed below the open.
Exactly.
On the SPY, I think it was green, and I want to say the RUT was green too. The small caps were.
Well, let's look at the Russell one right here. IWM, here's IWM 223. And daily chart. Woohoo!
Yeah, see, that was, yeah,
This one was a little bit stronger.
yeah. Out of the three,
Didn't have quite a green candle, but we had a blue one. So that's cool. We'd like to see green ones.
Yeah.
Yeah. Your parabolic SARs did not cross. You see that they're still purple.
You got the MACD and
MACD did cross, yeah. Now this has been a tough market. It's, here's your 60-minute chart. You close down at the end of the day. And your 30-minute. Your 4 crossed over your 8, your MACD crossed over. Usually if you want a decision at the end of the day, look at your 30-minute chart. What's going on with the 30-minute chart? You close strong, fine. The other one was DIA, correct?
yeah, the fourth.
The fourth indice. Oh, this one's an ugly one.
Yeah.
Other than I had a bounce today.
Yeah, I think a lot of them did gap open.
And then it closed down here. As you see the tombstone candlestick here.
Yeah, unfortunately couldn't run or couldn't hold that.
Nope. So, and you can look at how we closed, on a 15-minute chart. That's not good either.
Yeah.
So,
Yeah.
I'm just like you here. I kind of either hedging it or just leaving it set. I put a word in for our PVG Asset Management. What we do is we hedge the portfolios during a market correction. I can show you that, and then we'll end the day. This one's the dynamic core, and it only invests in the S&P 500. And as you can see here, we've got 25% in BOO, 25% in IBB, and 50% in SPY. And we have been market neutral, where you'd put 50% into S8, which is short the S&P. So basically, you are part. And so during these times, you don't want to be short. You get your hands caught, and then you're down 5% the next day. So rather than being convinced the market's going down or up, this is the perfect way to do it. We've seen lots of volatility in the last 2 or 3 weeks. And so this way you can basically park it. And then once the direction is solidified, we either take the shorts off or we take in and then add on to the longs to it. We think the market's going to go up.
Right, exactly.
So you can see how this works. If you go back to 2008, you can see the market lost over 37%.
Wow.
And we were only down 5% that particular year. As you can see here, we've never had a double-digit loss, which is so cool. Yeah. And one of our particular models even had positive returns in 2008. It's called the Loss Adverse Equity Income Portfolio. So we had positive returns in 2001, 2002, and 2008. This is where we buy dividend-paying stocks, hang on to them, collect the dividend, but we got a hedge on there so you don't have to sell your positions. kind of a neat approach.
Right, yeah.
Yeah. So, but yeah, if you want to have your money, minimize the losses, it's the place to go. But that's all I pretty much have today. I think we're both in agreement that we might see a little bit of a correction here. And then after that, we might continue moving up, maybe to 4,500.
Right, yeah. Yeah, I know the only positive news out there is that they raised the debt ceiling. Like Congress finally agreed on that.
Mhm.
So a little bit of good news. At least we avoided that crisis.
Now they got to get the spending bill through.
Right. Now I got to get the spending bill through.
So, or maybe not.
Maybe we start.
We should ask JT if he has any questions here.
Okay. I had it on mute while you guys were going back and forth there. I didn't want to, since this is going to be on the web, I didn't want to mess it up.
I can edit you out too. So yeah, no worries.
No, I don't really, I mean, it's very interesting stuff here. I'm trying to grasp it all,
Yeah, just so you know, Dennis trades with ETFs. And there are directional ETFs. There are inverse ETFs, like for instance, the S&P goes up, an ETF goes down. There are what they call leveraged ETFs, where if the SPX goes up 1, 3 times will go up 3. So which, unless you know what you're doing, can be kind of a little bit dangerous. So yeah, so Dennis is quite fluent as far as the various ETFs that trade along with both the market, commodities, that sort of thing.
Well, Buffett says, what's his famous quote? The stock market is a device to transfer money from the impatient to the patient.
Yeah.
Right, exactly, yeah.
Sometimes you need an overall direction, and you have to have nerves of steel just to stay in.
Well, yeah, that's a fact.
You just don't want to sell this because you lost 2%.
Yeah.
If you believe in the direction you're going, you hang on to it.
Yeah, and I have to admit, through this past week or so with the volatility, I've traded less and less. Part of it is I'm just too busy to pay attention. And I don't want to sit there, get into a position and then watch it reverse on me and end up losing money, kind of thing. So like I said, I've kind of pulled back on my trading lately. So I miss it. Hopefully get back into it, but you gotta be smart.
You definitely have to be able to budget for it, because you got to be able to take the good with the bad.
Right. Yeah. Right. Yeah.
Hmm.
Okie doke.
All right. Well, till next week.
Yeah, sounds good. Thanks for joining us, JT.
I appreciate you guys letting me. Thank you so much.
Yeah, come back and join us next week.
I'd love to.
Okay. Bye, everyone.
All right.
We'll see you.
Take
Bye.
care. Thank you.